Good morning, everybody, and welcome to the Overnight Action Report for Asia. This is where we're going to take a look at all the trading activity from Japan, China, Hong Kong, as well as India. Now, overnight, the trading was relatively mixed, but fairly quiet. There was some interesting headlines that came out from the World Bank. It did lower its GDP estimates for growth and their outlook for 2017 and 2018. They adjusted their previous forecast of 2.8% down to 2.7%. Now, that didn't ruffle much feathers. We also saw as far as global growth and global markets, but it is something that should be watched. They also did reduce or maintain their current outlook in the U.S. at 2.2%, despite the fact that we don't know what the Trump administration is going to be doing as far as fiscal stimulus and so forth. Now, taking a look at the Asian markets, we're going to start with Japan and the Nikkei. Finished up about 0.3%. We saw growth-sensitive names across the board up. Sumco, Nippon Steel, Kobe Steel, Japan Steelworks, as well as Mitsubishi Materials, all posting gains between 2% and 4.4%. EWJ finished the day yesterday. That's the Japanese ETF that tracks these stocks at $50.32. Over the next 2 days, there's still a 75-cent range being priced in this $50 ETF. And the $9 range is at 86 cents. Implied volatility, folks, is really low at 11%. That's where it's ranking out right now. That's telling you not expectation of big violent moves. 50.07, 49.95, and 48.37. Those are going to be critical levels that need to be held for both short-term, intermediate, and long-term support if this trend is going to continue to the upside. Breaks of these levels is going to start to put chinks in that armor of the bull in Japan. Now, taking a look at the Hong Kong Hang Seng, climbed 0.8%, and it had strength among property names and financials. We said, keep an eye on this. This is where the weakness was in the last quarter. Sino Land, New World Development, China Overseas, Bank of China, as well as HSBC, all adding between 0.8% and 3.8%. We also saw continued strength in China Unicom Hong Kong, lagging. I just looked at it was down 2% overnight. That's the second day that we've seen that China Unicom has been under some pressure. Watch that one closely. EWH closed last night at $20.69. This is the ETF that tracks Hong Kong stocks, and you could add this to your portfolio if you're looking for exposure in Hong Kong and China. The 9-day estimated range is right around 30 cents, and the implied volatility is still really inexpensive. 1990, 2056, and 2051. The latter two are midterm and long-term support. We want to see those actually hold if we're going to keep institutions happy in Hong Kong and in EWH. 1990 is the 20-day moving average. That's the trend moving average. We need to see it pick up some velocity, so we're going to want to see some volume if, in fact, the upside short-term trend is going to get a catalyst. Now, in the Shanghai in China, the composite lost about 0.8% overnight. Shandong Group and Xingma Industries registered losses between 5.4% and 6.8%. Now, FXI is the ETF that you can utilize that tracks the top 30 large cap stocks in the Chinese Shanghai Composite. It's trading at 36.26. The 2-day range is at 57 cents and the 9-day range is at 91 cents. So basically you're looking at a 9-day range of where it could be as high as 37.50 or as low as right around 35.50. So very interesting action there. We're going to watch that closely, but Ivy rank is very low at 13%, so there's not a heightened expectation of any violent moves either up or down. 35.40, 36.26, and 35.53 are going to be levels that you're going to want to keep an eye on as far as support if, in fact, the bulls are going to continue to keep control in this Chinese ETF. Finally, we're going to take a look at India and the Sensex. Added about 0.9% this overnight, and it was broad-based. We did see a lot of the materials segment and some growth-sensitive names on the upside, a lot like what we saw in Japan. We saw Coal India. That actually spiked 5.4%. That was the biggest winner. You saw Tata Steel, Larsen and Toubro. You also saw Power Grid and Mahindra rallying between 1.4% and 4%. Now, EPI, the Indian ETF that we track here at MarketStream.live, it was trading at $20.61 on the close yesterday. The 2-day range is right now at 37 cents, and the 9-day range is at 54 cents. Now, implied volatility is in the mid-level of its rank at 44%. It's critical levels, though, that you're going to want to watch, especially if, in fact, the implied volatility rank starts to increase even more. You're going to want to watch 2025, 2036, and 2057. Now that the underlying is above its long-term, this long-term level of the 200-day moving average, that's now acting as support. Any further closes above 2057 is just going to give more catalyst to the long-term bulls. All right, folks, that's it right now for the overnight action report out of Asia. Join me at 8:45 Eastern time, and we'll be talking about all that's going on the opening action in Europe. See you then.